So yeah, welcome guys to the YouTube channel back again. So in this video we will be talking about secrets to order blocks. I'm sure most of you are having issues or problem with order blocks. Now in this session you will learn how to identify key and important order blocks. So let's not do much of talking, let's just get to the charts and over with. As we all know, order blocks are typically the last down move before the up move. Like we all have been taught, or we all know, it is actually the last down move before the up move in a bullish or a bearish market. So I'll take a little time to identify types of order block. Now if you can see in this, there was this push down move before this push up move. So the last down move candle before that up move was this. I'm sorry guys, was this is a bullish order block. So obviously if we were to go through the chart, we have this push up move before this push down move. So obviously the last candle there, the last up candle before this down candle, is obviously our order block. Same here also, we have this push up move before the push down move, then the last down candle there is this. Obviously it's an order block. So however, likewise in this down move before this up move, so we should be looking for the last candle there. So the last down candle in that move is obviously this down candle, and this is order block. Now why do we need to know about order blocks? We need to know about order blocks because these are where orders are pretty hidden. Like all these market makers, this is where they actually put up their order. So however, or literally, if price actually trades away from a zone, we expect price to come back to a level of either demand or supply. So we all know that immediately this becomes a break of structure here. If this is a break of structure, we anticipate a pullback into this range. However, we do not know where price wants to respect in this range. Okay, so if we do not know where price is going to respect in this range, but we all are anticipating that price should come back towards a level of demand somewhere around, I don't know, a random area. So we just want price to come back to a level of demand. Now usually in this level of demand or supply, bearish or bullish scenario, in this level of demand or supply, I want you to pay keen attention because price usually comes back to the order block that is in that level of demand or supply. That is, price should come back and use, or they should come back and fulfill orders before it. So let me explain the logic behind order blocks now. Order blocks takes time to gather information. They gather money. Money is hidden in order block. That is why it's so important. Money and a lot of orders are hidden in order blocks. That is, when price comes in and does its thing, trading away from it, it leaves behind market orders that have not been triggered properly. So you see why price tends to come back. So this move was not the initial investor's move. They only made this move to push out all the sellers, whereas their original buy limits exist within this order block. So they have to come back and pick up their buy limits, or their limits. In this case, we are dealing with a bullish scenario. So obviously they need to come back and pick up their their limits to actually push price to the higher prices. Now the only way for us to understand where price comes to pick up this limit is the concept of what order blocks. Now in the market, if I was to show you like I've showed now, order block is what, just a down move before a up move in the market. So literally all of these things I'm highlighting out are all bullish or bearish order block. Why? Because obviously it's a down move before up move. This is an up move before a down move, and you can see price respects order blocks so well. Now we don't want to randomly trade order blocks in the market. We want to understand how to identify high probability order block. Now I'll be giving you some keys to understanding or that will give you confidence in high probability order block. Now the first key is an order block must have, put this in mind, liquidity. That's the first key. Now 2, an order block, sorry, let me just highlight it in order, like, in hierarchical order. So first of all, order block must break structure. So if you watch out for all of these things, trust me, must break structure. Then 2, it must have inefficiency. Around it. Now inefficiency can also be called is also called imbalance. Inefficiency, also known as imbalance, around it. And also an order block must have liquidity sitting below or above it. So these 3 things, I want you all to study it, master it, make it your own rule, because these are the things I actually use that gives me top-notch rates. These are the things I use. Now we'll go a step further to defining all of these things. Now in a market, we want to consecutively identify break of structures, just like this, break of structures like this. We assume this is a break of structure template. A break of structure. This also is a valid break of structure, and yes, of course, we expect or we anticipate price to keep on delivering, we should come and break this structure. Now see, there's a key to identifying order blocks. Now I said order blocks is always the last down move before the up move. Okay, it's always the last down candle before the up candle. I think this should be more clearer on 30-minute time frame or so. So it's usually the last down candle before the up move. Now if you were to look into a structure, immediately price shifted and broke this high around here, thank you, we have a valid order block, which is the down move, the last down candle before the up move, and this is it, this entire black candle. That's it. That's where we are expecting price to come and trade into. Now the validity, or I would say the validity of an order block, must actually lie within these 3 things. Must break structure. Did this order block break structure? Yes, thank you, it broke structure. Now what again about this order block do we need to identify? Did it have inefficiency or imbalance around it? If we were to check, yes, definitely it had a little bit of imbalance. The price came back to fill. Thank you. Even though it didn't tap into this order, it came and filled off of all the inefficiency, whereas we all know this is literally a failed order block. So you see, it had inefficiency, price came back, filled the inefficiency, and also must have liquidity sitting below and above it. Now the only reason as at this time why I won't be using this order block is because it has no liquidity sitting below it, that is no low sitting below it. Now the only time this order block now becomes valid to me is because right now it has met all criteria. This order block personally has broken structure not once, not twice. Now it is having liquidity sitting below it, and this is liquidity, this is inducement liquidity. reasons for we expect price to come and take out this low, tap into this other block before price actually delivers into its direction. That is, price has what? Engineered liquidity. Now price has met this structure, it has met this rule, it has broken structure, correct? It has inefficiency and imbalance around it, very correct, and also it has liquidity sitting. So therefore it makes this other block a very strong and valid order block. Now I want you to master these 3 rules, because this is what is going to help you. 3 rules is what is going to help you. Same way, I want this to make sense to you. So immediately we have this break of structure, deleting this structure or this other block that we had, deleting what we originally have in mind. Same way, this works on any time frame. Just need to understand the concepts. Now when we have this break of structure, where was the last down move before the up move? This is obviously the last down move before the up move, taking the wick into account. Very good. So this is the last down move before this up move. Now what does it have? Does it have inefficiency? Very correct. This is not a class to teach about inefficiency. As you follow on, there might be videos on inefficiencies and imbalance. Now does it have inefficiency? Yes, it really does have inefficiency. Does it have liquidity? Yes, it does have liquidity, and this is it. There has to be a low sitting below it, and we want price to come and take it out, which is obviously liquidity. Now can you see, price came, took out the liquidity, tapping into our other block. If you can see it well, price tapped into it, and you should have had a very jiggy trade if you took it. And obviously, what do we expect? We expect price to go and deliver. That is exactly what we expect. Sorry, I just want to change the color for you guys. So we expect price to deliver. Yeah, just like so. So we expect price to deliver like so, targeting this eye. So we all understand how other blocks are formed, how it is also, how we can identify other blocks. Now what do I say? An order block must break structure. Now I know you guys are wondering, just because I said other blocks is a down move before the up move. Now you can see all of these things are all down moves. They are all down moves before the up move. Sorry, this is incorrect. Yeah, unless we put this candle, this bullish candle, into account, yeah, this becomes a down move. Now can you see all of these other blocks were not respected, they were traded through. Why? Because this other block did not break structure at all. So it didn't do its work, it didn't break structure. So the 3 things you should put in mind. Let's go randomly into any chart, we'll take the rule into account, and we'll see if we got a jiggy trade. So if you can watch this, if you can understand this rule, believe me and trust me, you understand. And this works on any time frame. Now let's go to a higher time frame, because this stuff usually works. It works everywhere. It works everywhere. So let's see, if we're analyzing as at this point, if I was analyzing as at this point, yeah, so this was obviously a breaking structure. So it's obviously a breaking structure. Yeah, this was obviously a breaking structure. Now where is the last down move before the up move? Obviously this is the last down move before the up move. Now did it meet our rule? Yes, this particular order block broke this structure at this point. Sorry, we have a break of structure. Yeah, broke the structure at this point, left out inefficiencies that has not been filled, thereby giving us what? The second criteria. Now does it have liquidity? Yes, it does. You see liquidity just sitting below it. So long term wise, I expect sorry about that. Long term wise, I expect price to do this, perhaps trade into this zone just for you can see any up push. And that is how to correctly identify high probability order blocks. Now I want you to put it in mind, skip off or take off what I've written off the screen. What do I tell you? Another block must break structure. If it doesn't break structure, it is not valid. If it doesn't break structure, do not use it. Another block must break structure, must have inefficiency sitting around it. Also, you must have liquidity sitting around it. If you know those three keys, your trading becomes simpler and easier. Okay, I want you guys to go back, practice it quite very well, and you see it is jiggy. So let's take a few more examples like this. Yeah, if I was at the market as at this point, I saw this particular breaking structure. So obviously, where is our other block? It's always showing the last down move before the up move. So we have this last big down move before the up move. So let's say price broke structure. Yeah, so you can see obviously price. Now I want you to understand that all of these things that I are seeing here, you have every right to call them order block, but why am I not using them? Yes, they broke structure, that's one, but they have no liquidity in it. No liquidity sitting in it at all. They have no liquidity sitting around it. So that is why all these order blocks, this, all of them, they failed, and price came to utilize this proper order block. So price came to utilize this proper order block. Why? Because this order block broke structure. What does it have again? It has liquidity sitting below it and a lot of inefficiency. So you see how price came, really utilized that order block. Can you see? Perhaps you were protecting this low, or the full low would have gotten a trade either ways, and you just target 1 to 2, 1 to 3, easy peasy, 1 to 5, whatever your trading management are. So you see, this is easy and it's peasy. That's all. So let's just keep on following this market. Now price broke structure again. Why do I not use this last down move before the up move? Yeah, this last down move broke structure, but it had no liquidity sitting in it, no low, no endorsement for it. So to me, I don't consider that as an order block. However, this is a down move before a up move, which had what? Liquidity. Exactly, this is liquidity sitting below it. I expect price to come and take out the liquidity. It has quite some inefficiency around it. So yes, would have been jiggy, probably taking this, protecting the whole low, which is here, and maybe expecting to run to the next high, or you just wanted to target higher prices. I don't know. So you see how to properly identify it. Go back test it, use it for your system, and see how easy your trading becomes. So this is Signal Spark Academy, and our YouTube channel is highly grateful. Thank you for watching, and I would really love to have that feedback. Please do subscribe to this channel. Bye.